Welcome back. Let's talk about the big banks. Kotak Mahindra Bank is down over 5% following the Q4 earnings. But now lots of the large banks are out with their numbers. So Abhishek now joins in with a report card on the large lenders and who did what. Abhishek.
Well, Rima, to begin with, large lenders have reported their Q4 FY25 performance. And if you take a look, at the comparison table, private banks have seen robust deposit growth on a sequential basis, anywhere between 5.5 to about 7% range. In fact, at a time, this has come in, at a time when deposit growth is a big concern in the industry. Seasonal in nature in Q4 for deposit growth to happen for SDFC Bank and Axis Bank. Now, SBI has seen the weakest deposit growth on a sequential basis at just 2.9% in Q4 FY25 amongst large banks. If you take a loan growth, and if you take a look at the loan mix, the corporate portfolio has actually been shunted down by private banks because of the unfavorable yields. That is what many managements have commented. So, the likes of ICICI Bank and Axis Bank and Kotak Mahindra Bank as well, they spoke that, unfavorable yields have led to corporate book not growing that much. On the other hand, if you take a look, SBI's, corporate growth of 5.5%, that is corporate loan growth, has been one of the highest amongst all the large banks. Now, net interest margin has improved quarter on quarter for most of the banks, especially ICICI Bank and SDFC Bank. They have seen the highest sequential growth in their net interest margin. However, for SBI, it's actually shrunk by 1 basis point on a sequential basis. Now, operational efficiency was another area of focus. It's been the highest decline for SBI, their cost to income ratio declining by 184 basis point on a sequential basis. Axis Bank and Kotak Mahindra Bank actually saw an increase in their cost to income ratio. The meaningful part in any bank's result is the return ratios or ROA. So SBI saw a decline in its ROA, that is return on asset, on a sequential basis, while Axis Bank and ICICI Bank have seen the highest increase in their return on asset ratio on a sequential basis. If you take a look at the valuation picture with reference to price to book value, large banks like SDFC Bank, ICICI Bank on the private side trade between 2.7 to 2.9 times, while SBI is trading at 1.5 times price to book value on a 1 year forward basis. Back to you.
Indeed. So interesting comparisons there. Abhishek, thanks a lot for that. We'll take this conversation for